Have you ever wondered what happens to your pension when you pass away? Can your family inherit it? Will they have to pay tax on it? In this video, I'll break down how different pensions are handled after death, who can inherit your pension, and how to minimize taxes so your loved ones get the most from your savings. Let's get started. Different pensions, different rules. Not all pensions work the same way when it comes to inheritance. The rules depend on what type of pension you have. State pension. This cannot be inherited, but in some cases, your spouse may receive extra benefits. Workplace and private pensions. These can be passed on, often tax-free, depending on your age at death. What happens to your state pension when you die? Unlike private pensions, your state pension does not automatically pass to your family. If you're married or in a civil partnership, your spouse may inherit extra pension credits if you paid more national insurance, NI contributions than them. You were on the old basic state pension system before April 2016. If you're single, your state pension stops when you die. Your children or other relatives cannot inherit it. So if you want to leave something behind for your family, private pensions are your best bet. Inheriting workplace and private pensions. Defined benefit versus defined contribution pensions. Workplace and private pensions can be inherited, but how much your family gets depends on the type of pension you have. Defined benefit pensions, final salary pensions. Usually provide a reduced pension to your spouse. Sometimes pay out a lump sum if you die before retirement. Defined contribution pensions, personal or workplace pensions. Your full pension can be passed to your chosen beneficiary. Whether they pay tax on it depends on your age at death. Pension inheritance, tax rules. Will your family pay tax? The biggest factor in whether your family pays tax on your pension is your age at death. If you die before age 75, your pension can be passed on tax-free. If you die after age 75, your beneficiaries will pay income tax when they withdraw the money. That means if you're nearing 75 and have a large pension, it might be worth planning your withdrawals to reduce future tax bills. Who can inherit your pension? You can choose who inherits your pension. It's not limited to just your spouse. You can nominate anyone, your partner, children, or even a charity. Your pension provider will follow your expression of wish form, so make sure yours is up to date. If you don't name a beneficiary, your pension provider decides who gets it, which can cause delays. To make sure your pension goes to the right person, update your beneficiary details today. How to pass on your pension tax efficiently. If you want to make sure your loved ones get the most from your pension, here are some tips. Keep your pension invested. Instead of cashing out, your beneficiaries can inherit your pension tax-free if you die before 75. Use your tax-free lump sum wisely. Consider taking your 25% tax-free amount earlier to reduce taxable withdrawals later. Consider a trust. Some pensions can be placed in a trust to help control how funds are used. A little planning now can save your family thousands in unnecessary taxes.